Hey everyone. Hello everyone. A very good evening to all of you guys. Welcome to the Finance Current Affairs session. So I hope guys I'm audible. My screen is also visible. Can you just quickly confirm in the comment section? I hope my audio and video is fine. Okay, perfect. Thanks for confirming. So guys, let's start with the discussion related to the finance current affairs. The very first thing is RBI launches the Financial Literacy Week 2026. So we know that we have a good amount of population, right? We are leading in terms of population. And that's why we do have a huge amount of population that we need to take care of. I'm talking about including them as a part of our financial system, right? So that's why we do have financial inclusion, and we do have certain initiatives to enhance the penetration of financial inclusion. One of such initiative is the Financial Literacy Week, right? So every year RBI launches Financial Literacy Week with a certain theme, and this year also RBI has launched the Financial Literacy Week in 2026, and the theme for this year will be KYC, Know Your Customer. The theme is KYC, your first step to safe banking. Considering the increase in the number of cases related to the fraud and error in banking, here we are. This time the Financial Literacy Week will be related to the Know Your Customer, KYC, first step to safe banking. So this will be the 11th edition of Financial Literacy Week. We are doing this Financial Literacy Week since 2016, right? To promote the financial literacy. So here RBI is again conducting so many campaigns for enhancing the financial literacy. And the week will be observed on 9th of February to 13th of February. Okay, so this will be the tenure of the week. And here RBI is engaging in certain activities related to mostly campaigns, educating people more and more about the financial inclusion, and this time we are going to educate them about KYC, Know Your Customer, right? So this is the Financial Literacy Week overview. Last year also it was there in the February month only, and today it is there. This time it is there on the concept of KYC. Okay, so here three things will be definitely observed. The very first thing will be importance and ease of KYC. Why KYC is important. Then re-KYC. Don't use the bank account for certain, I will say for 1 year or 2 years, then the bank will again ask for your KYC, right? And it is so common in the public sector banks. When you go to the bank, they always ask you for most of the times for doing your KYC again and again. So that's re-KYC. Then we have the CKYCR as well. So this drive related to educating people more and more, making them literate, is related to KYC. Why KYC is essential, why re-KYC is essential, why redoing the KYC is essential, and then CKYC is also one of the criteria here. And what is CKYCR? It stands for Central KYC Record Registry. So instead of having so many registry records, let's have a central record for each and every KYC. So it acts as a consolidated database where all the KYCs will be stored. Okay, so this is a central authority that maintains the KYC data in India. So this will store customers' KYC and it will issue the CKYC number for reusing across multiple financial institutions. Definitely they will be asking you for the Aadhaar card, PAN card and basic documents to verify from the CKYC, right? To verify from the CKYC. So all the KYCs are already there in the CKYC. You will give your Aadhaar card and PAN card and it will be cross-checked with the CKYC as well. Okay. So these three things are included. Next one is related to the RBI monetary policy update. Recently in the month of Feb, only in the first week of Feb, we have seen that the Monetary Policy Committee has given the decision they have kept repo rate unchanged at 5.25%. Okay, so no changes are there in the repo rate, and this decision was taken unanimously. That means 100% voting was in the favor of keeping the repo rate unchanged. They don't want any kind of change in the repo rate because everything is going fine. Inflation data is fine, GDP data is fine, right? Money supply is also fine in the economy. So the repo rates are at 5.25%. The SDF, which is also called as standing deposit facility, is at 5%. 0.25% lower than the repo rate. And if I talk about the MSF, which is marginal standing facility, this rate is at 5.5%, 0.25% higher, and we call this concept as the LAF corridor, right? So this is called as the cap or the ceiling. The repo rate is always in between the MSF and SDF. I'll tell you the meaning of repo rate, MSF, SDF as well, no worries. SDF is also called as floor rate. Why? Because it is at the lower end always. So let's suppose if a bank needs short-term money, a short-term loan from Reserve Bank of India, Reserve Bank will be giving the bank loan at the repo rate 5.25%. So repo rate is the rate at which the RBI will be lending you loans and advances to the banks. If bank is having surplus, bank can also deposit that money with Reserve Bank of India, and this is called as SDF, standing deposit facility. If you are having surplus money, you can deposit that money with the Reserve Bank of India, and RBI will pay you 5%. Right, that's the concept. RBI is going to pay you 5% on it. We have the MSF as well. MSF means marginal standing facility. What if you need, as a bank, you need immediate money? You need money immediately. Emergency funding. Definitely you have to pay some premium. So the MSF is above the repo rate. So 5.5% you have to pay. You can borrow at repo rate, but immediately if you want money, overnight money, emergency funding, then you can borrow at MSF. And this is called as the corridor approach or the LAF corridor of Reserve Bank of India. So repo rate will be in between always. The ceiling will be MSF and the floor will be SDF. Okay, please do remember this stuff. The monetary policy stance is still neutral. And what is the meaning of neutral stance? Anyone? What is the meaning of neutral stance? Can anyone just quickly tell me in the comment section what neutral stance is all about? Whether we are interested in cutting more rates, or we would like to keep it at 5.25% only, or we'll think in future. What is the meaning of neutral stance? Any idea, anyone? What's neutral stance? Okay, Garvit says no change. What about others? What do you mean by neutral stance? We'll think about it. As of now, we are neutral. We'll think about it, whether we want to cut the repo rate or not, or maybe we want to increase the repo rate. We will think about it, right? As of now, we are neutral. We say that we all are going to watch a movie, right? Let's plan a movie. Whether you want to come or not, we say that we are neutral. Aaya to bhi theek, nahi aaya to bhi theek. It will be even fine if I join the plan. If not, then also fine. So RBI also states, I am in a neutral mode. I don't care, right? Time will tell whether I'll increase the rate or whether I'll decrease the rate. So as of now, the stance is neutral. Okay. What is the primary objective, guys, of this monetary policy committee? We know that RBI is there to maintain price stability, and that's what the main objective of MPC is, maintaining the price stability. And by price stability, I mean controlling inflation. Do RBI directly control inflation? Actually, RBI controls the money supply in the economy, and that's how RBI is able to control the inflation. If you have a high money supply in the economy, higher inflation will be there. If you just reduce the money supply in the economy, low inflation will be there. And that's how RBI tries to control the inflation and maintain the price stability, right? While keeping in mind the objective of economic growth. So these things are also there in the preamble of RBI as well. Maintain price stability and take care about the economic growth. So MPC meeting is again a statutory decision making body which is constituted by central government under section 45ZB of the Reserve Bank of India Act. And the whole idea is maintaining the price stability, and we want to maintain the economic growth as well, right? Keep the view of having a good growth rate as well. So again, it determines the policy interest rates, specifically the repo rate, right? And that's how the RBI controls the inflation. And there are some members from the government of India as well. Out of all the members, some members are there from the government of India as well, and they do take a collective decision. Okay, they do take a collective decision, and how they are taking the decision? On the basis of majority. On the basis of majority. And what if there is a tie? If there is a tie, then RBI governor is having the right to do a casting vote. That means a second vote. RBI governor will be doing the casting vote in case of a tie. Right? So this particular MPC meeting will be meeting 4 times a year, and in this manner they will be taking decision whether to increase the money supply or to reduce the money supply. So these are the crucial numbers, and please do remember we do have a corridor approach. 5.5% MSF marginal standing facility, the overnight borrowing, repo rate at which the RBI lends money to the banks for short duration of time 5.25, no change. SDF, which is also called as the floor rate, where the bank can park excess money with the Reserve Bank of India, which is at 5%. The stance is neutral. Okay, the stance is neutral. If I talk about the GDP growth rate for the financial year 2026, financial year 2026 is still on its way. It will be concluded on 31st January 2026, right? Sorry, 31st March 2026. 31st March 2026. So that's why we still have an estimation for that. We are not sure about the growth rate, but the growth rate is anywhere around, it will be anywhere around 7.4%. Exactly kya hoti hai, that time will tell when the financial year is over, right? But as of now, the RBI best estimate is 7.4%. That's the estimate of Reserve Bank of India, right? And we are doing the quarterly estimate as well related to GDP growth rate. But again, I will say whenever your exam is there, whatever the latest monetary policy committee is there, we can definitely read about the figures from that particular committee meeting wala video. Okay, so no need to kind of bombard you guys with so much of data. I will say ki ye bhi yaad kar lo, wo bhi yaad kar lo, do remember this as well, do remember that as well. You just have to remember the monetary policy highlight of the meeting, which is just before the examination and not all the, right? So just try to understand the concept, and that's fine. Headline inflation, again the headline inflation in November was quite low, and we have seen an increasing trend now. It is 1.3% in December. January ka data will soon also be released, and it will be in an uptrend only. But we are very well within the FIT framework, flexible inflation targeting, which is 4% plus minus 2%. That means the lower range is 2% and the higher range is 6%. So we are very well within the FIT framework as of now. So no worries at all. Even if there is a increase in the inflation, still we are closer to the lower band only. So no worries at all. The CPI inflation target for the financial year 2026 is at 2.1%, and we do have the quarterly targets as well, right? And definitely guys, the January data, whenever it is going to be released, I think by today or by tomorrow, so that will be subject to the new base year. That will be subject to the new base year. Why? Because there are changes in base year if I talk about CPI, WPI, GDP and so on. So again, the base year changes impact will also be reflected in that data. Next one, Walmart becomes the world's first retail company to reach a $1 trillion market value. Now, whenever I talk about the size of the company, have a look here. If I talk about Reliance Industry, the current market price is 1458. 1458 is the current market price of one share of Reliance Industry. But if I check the current market price of MRF, it is 1,51,000. 320, which makes MRF as the India's most expensive share. If you want to just buy one share of MRF, it will cost you 1,51,320 rupees. This is the price of 12th February. Okay. Can I conclude that MRF is a bigger company as compared to Reliance Industry? Can we conclude that MRF is big as compared to Reliance Industry? Reliance Industry is small, MRF is quite bigger in size as compared to Reliance Industry because the per share value is high. It's almost, kind of more than 100x in this example. Right, even if I do 100x of Reliance Industry, still it will be much lower, it will be slightly lower than the price of one share of MRF. We can't conclude such a thing. Why? Because this is the market price per share. This is the market price per share. We always look at the market capitalization and not the market price per share. Have a look at the market capitalization of Reliance Industry. It is 19,73,440 crore. 19 lakh crore. The market capitalization of MRF is just 64,000 crore. Why is it so? It doesn't matter you have a per share price quite high. It depends on the number of shares multiplied by the market price per share, which is nothing but market capitalization, So don't just look at the market price per share, because maybe the number of shares of Reliance Industries are quite high as compared to the MRF, right? That's why we always check the market capitalization. And here we are talking about the market value or the market capitalization only. So Walmart becomes the world's first retail company. Okay, it's not like that any other company has crossed the 1 trillion USD mark, but this is the first retail company to cross this particular mark. Okay, then the next one, Alwar district becomes the first in India to achieve 100% insurance coverage. So Alwar, which is one of the district in Rajasthan, I am also from Rajasthan only, then this particular district becomes the first one to achieve 100% insurance in India, and this is great because we do have a national roadmap of insurance for all by 2047. So Alwar becomes the first district to achieve this mark. Okay. Then Kotak Mahindra Bank issues India's first fully digital FPI license. So what earlier used to have is, we were having too many paper related compliances as well for giving a FPI license, foreign portfolio investor license. If you are a foreign investor, you have to invest in equity shares, you want to invest in equity shares in India, in Indian companies, you need to take the FPI license, right? And there was so many documentation requirement which we used to have for obtaining a FPI license. Now the FPI inflows are going down day by day, and that's why SEBI was concerned and they introduced in January 2026 what they introduced? Unified digital workflow. This allows the financial institutions to handle the FPI license completely online with electronic signatures, and that too on a special application portal. So no worries about the documentation requirement. You don't need physical documentation if you want to take the FPI registration license. Get in touch with any financial intermediary that SEBI has allowed, and via that financial institution, via that financial intermediary, completely in an online manner, no offline documentation requirements, with the help of e-signatures and a special application portal, you can take the registration as FPI. So Kotak Mahindra Bank has issued India's first fully digital FPI license. Now this news is important from your general awareness perspective, because in your general awareness also, we do have a part of your finance current affairs, right? They frequently ask finance current affairs as well. So these finance current affairs classes will be helpful for general awareness section, right? Some questions will be there related to finance current affairs. So definitely these lectures will help you attending the general awareness related question. It is also helpful for you for the finance paper, right? FM paper के अंदर finance जो आपका आता है, उसके अंदर भी there can be some questions related to finance current affairs. So these sessions will be helping you in your phase 1 as well as your phase 2, right? So Kotak Mahindra Bank is nothing but a custodian. What is a custodian? It is an intermediary, right, which is handling the registration requirements, for safekeeping the securities and assets of the FPIs, right? So let's suppose I am in UK, I am a foreign investor, I am coming in India via the FPI route, foreign portfolio investor route. I want to invest some money in the stock market. So I got in touch with Kotak Mahindra Bank. Now Kotak Mahindra Bank will help me obtaining the FPI license via the digital portal, right? So Kotak Mahindra Bank will be taking care about the securities, my assets, my settlement processes, and handling the reporting requirements as well for me. So in that manner, I will call the Kotak Mahindra Bank as my custodian here, and it is nothing but an intermediary between the investor and the market infrastructure institution. Now what is MII? Market infrastructure institutions, stock brokers, stock exchanges, depositories, all these things will be part of your MII. Okay, market infrastructure institution. If you are not able to understand this one, no worries at all. We are yet to complete the chapter of capital market in the class, right? In the new batch, definitely. So if you are from the new batch, we'll be having a detailed discussion related to market infrastructure institution. Just for the learning purpose, I am telling you quickly, market infrastructure institution is nothing that these are those institutions which are actually creating the infrastructure for the stock market, like stock brokers, Zerodha, angel broking, depositories, CDSL, NSDL, who are actually taking care of your shares, right? Who are actually taking care of your shares. These are the exchanges like Bombay Stock Exchange, National Stock Exchange, and so on. All these institutions are called as market infrastructure institutions who are actually developing the market, right? Next one, India agrees to cross-border crypto data sharing framework under the OECD's. What is OECD? Organization for Economic Cooperation and Development. We are having so many countries. We need an organization that can facilitate the economic cooperation and development among the member countries, right? Then what is CARF? CARF is nothing but Crypto Asset Reporting Framework. What is a cryptocurrency? It's a method of making payment, right? It's a kind of method of making payment, or it is a kind of asset class in which people invest, right? Or it can be both. Plus, it is a use case of the blockchain technology. It is the use case of blockchain technology. So let's suppose I started teaching to the USA students as well, right? For any kind of examination related to finance. Somebody paid me in cryptocurrency. If somebody is paying me cryptocurrency, it won't be routing to the normal banking channel, right? So RBI is not aware about such a kind of transaction. SEBI is not aware about such a kind of transaction. Income tax department is not aware about such a kind of transaction, because it is a P2P transaction, person to person, peer to peer transaction. So somebody from the USA sent me the fee in cryptocurrencies. I can easily evade tax, right? I can easily evade tax. For these kind of gaps, now India has agreed to the cross-border crypto data sharing framework. That means you have to share the crypto related data specifically related to the cross-border transactions. If somebody sent money to Prateek Sir in the form of cryptocurrency, then the crypto exchange will definitely report that to the government, and the government will report that to the Organization for Economic Cooperation and Development via the Crypto Asset Reporting Framework, as per the Crypto Asset Reporting Framework. Sir, why you are covering this news as well? Because this can be definitely important for your examination. If you check the past 6 months news, specifically so many news are there around artificial intelligence, around blockchain technology, around cryptocurrencies, around stable coins. That's why these topics should be in super strong zone, right? High chances that some topics related to blockchain technology will be there in your examination, right? I also told in the examination related to, when the RBI exam was there, 2025 exam was there, I also marked it as important, but only just one question came as an MCQ related to US Genius Act, which was an act related to stablecoin. But in 2026, again, it is going to be one of the crucial area where RBI will be asking questions both in the form of MCQs or in the form of descriptive question. Okay. So that's why I usually cover all the news specifically related to cryptocurrencies as a priority, because I personally feel that this topic is going to be important because it is the future actually, and it is not the future, it is actually the present. All the things related to cryptocurrency and blockchain are actually happening in India. Even RBI has released the CBDC, which is a use case of blockchain technology only. So here this enables us to align India with the global standard. All the countries are following this framework, so why not India, right? So this system is going to be again a part of India's tax administration system as a compliance. So if somebody is sending me fee in the form of Bitcoin from outside India, I have to pay tax on it. Right? Because we do have such a kind of framework which is for the economic cooperation and for the economic development. Again, if somebody is from the India is sending cryptocurrencies to the outside country, then again we have to report that transaction as well. All the cross-border transaction needs to be reported here, right? Acha, what is OECD? It is nothing but an international organization. As of now, there are 38 member countries. Sir, do we have to remember this number as well, that OECD is having 38 member countries? No, definitely no. It is just for knowledge purpose, right? Not required for the examination. Right? And we do have this framework for streamlining the transaction and enhancing the data sharing among different countries to curb the income tax avoidance issues, right? So automatic reporting will be there whenever there is a cross border transaction. Definitely the system has to automatically report to the framework. Scope of data sharing is there. Data elements will be shared, and global standards are there. So India is again following the global standard, which is good for every country for the tax avoidance purpose, for eliminating the cases where people are actually avoiding the taxes. Next one, a very quick update. I won't be covering it in a detailed manner because that's not required. LIC Mutual Fund launches India's first women-centric AMC branch. Now what AMC is all about? Do you guys know what is AMC? Asset Management Company. Can anybody just tell me what is an AMC? Asset Management Company. Any idea? What an AMC is all about, guys? Asset Management Company. What is an asset management company? It's somewhere or the other related to mutual funds. It is related to your mutual funds basically. No idea, no problem at all. So let's suppose I am investing in a mutual fund which is the brand name of which is HDFC. Okay. I'm investing in mutual fund 1000 rupees. And the name of the fund is somewhat HDFC. So this is not HDFC Bank, this is HDFC AMC, Asset Management Company. As the name says it all, this company is managing your assets. Mutual fund is an asset for you, it is an investment for you which will give you future economic benefit. So this company is managing your assets on your behalf. So I will give my 1000 rupee to this AMC. You guys will also be giving money to this AMC company, and this AMC company will again be buying securities in the market, right? So fund manager will be there. That fund manager will be investing in shares on your behalf, and whatever earnings that fund manager is able to earn, this AMC is able to earn, it will be distributed in the form of increase in the net asset value. That's what the concept of mutual fund is. But what is an AMC? This is nothing but an asset management company. So whenever you are paying something for investing in mutual funds, basically you are paying it to the asset management company who is managing assets on your behalf, right? So LIC Mutual Fund has launched India's first women-centric asset management branch. Earlier we don't used to have such a kind of concept of women-centric. Now LIC Mutual Fund has taken a step for encouraging more and more women to invest in the mutual funds, and that's why LIC has launched India's first women-centric asset management company branch. Okay, it's there in the South Delhi. Now you don't have to read anything else apart from the headline and where the branch is located. That's it. Okay, it can be a part of your general awareness related concept. Okay, not important from the second your phase 2, but for your phase 1 it can be definitely there. Next one, India's external commercial borrowing and FCCBs intent hits financial year 2026 high in December. So more and more people want to raise loan, want to take money from the foreign investors. Let me just first quickly simplify it for you. External commercial borrowing. You are borrowing money, but you would love to borrow externally, that means outside India. Why externally? Because if you borrow money from developed countries like US, interest rates in the developed countries are quite low as compared to developing nations. If you check the interest rates in India, they are definitely high. If you do an FD in India, you will get 6 to 7%. If you do an FD in US, you will get 3 to 4%. Why? Because US is a developed nation. And generally in the developed nations, the interest rates are lower. If the interest rates are lower, then why not to borrow from US? I would love to take a loan. Let's suppose I want to start my business. So I have taken $1 lakh loan from USA, from somebody from USA. So instead of borrowing in India, where I have to pay 10%, 12%, 15%, let's borrow from US. Let's borrow from US. So I have taken a loan of $1 lakh, right? And after 2 years, I'll be repaying this money. I'll repay this money after 2 years. So this is called as external commercial borrowing. These are the foreign currency borrowing, but remember I have borrowed the money in foreign currency. I have to again repay in foreign currency as well, right? So this is a kind of foreign currency borrowing which is raised by Indian companies, and usually we get this loan at a much cheaper rates. Why? Because maybe we are borrowing it from the developed countries. And this data hits an all-time high in December. So more and more people are willing to take loans from the foreign countries, from the developed nations. Now, can you guys tell me one risk? If it is so easy, why people borrow in India? Why not everybody is going to US and just borrow money at a much cheaper interest rate? Can you guys tell me the risk involved in this particular transaction? Anyone? What is the risk involved in this particular transaction? If it is so easy, why even people are borrowing money from the Indian banks at 12%, at 15%? Why don't they just borrow from US or from other developing countries or from other developed countries at much cheaper rates? What is the risk? Value of USD as compared to INR, or I can say that US dollar is a much powerful currency as compared to INR, and the value keeps on going up. So can I say, yes, very good, depreciation of rupee, or I can say appreciation of dollar. Let's suppose when I have taken a loan, $1 was equal to 100 rupees. I'm just for the sake of simplicity, I'm taking $1 is equal to 100 rupee, right? Soon it will someday touch 100 rupee also. Okay. So how much I'll be getting? $1 lakh multiplied by 100 rupees. $1 lakh multiplied by 100 rupees. So I got 1 crore rupee in the form of INR. I have 1 crore rupee now. But when I am repaying the loan, the US dollar was $1 is equal to 1110 rupees. This is called as INR depreciation. Now I have to repay $1 lakh. I need to pay 110 rupees to buy these dollars now. Earlier I was able to buy it for 100 rupees only, but now I have to buy $1 lakh at 110 rupees. Right? So now this time I have to pay 1 crore 10 lakh rupees. 1 crore 10 lakh rupees I have to pay. That's the problem. That is the real issue. Are you guys able to understand? Even if I am even if I am taking a loan at much cheaper interest rates, because of the appreciation of the US dollar, I am still losing. Why? Because now I have to buy dollars I have to pay that $1 lakh loan, right? So I have to pay more and more rupee to buy the same amount of dollar. Earlier I was just paying 100 rupee, but I have to now pay 110 rupee. So that's a great question, Monisha. Then why people are actually taking more and more loan? Maybe they feel that INR depreciation will not last so longer now, right? They feel that INR has already depreciated at a much faster pace, and in the near future they will be able to benefit, they will be able to take a benefit of cheaper interest rates, and INR depreciation won't happen. And that's quite speculative in nature, right? It's not a sure thing. So I will say it's just the expectation of those people who are borrowing from the ECBs. So there is nothing surety in the markets, in the financial markets. If I buy Reliance Industry, I think that it will go up. Maybe it won't go up, right? It will go down. So risk is always there. But these entities feel that INR has already depreciated heavily, and RBI will definitely take care of the coming months or maybe coming years, and INR won't go down so drastically. That's why they are taking a bet. Yes, they are good risk takers. Maybe they are calculated risk takers. Why? Because they have expressed their intent, and the organizations are Indian Railway Finance Corporation, Air India, Indian Oil Corporation, Aditya Birla Capital, right? So these are the giants. Achha, next concept is foreign currency convertible bond. This has also increased. Foreign currency convertible bond. What is the meaning of foreign currency convertible bond? Let me just give you a quick example. I am taking loan from foreign investor. I am taking loan from foreign investors, $1 lakh, but I will repay not in the form of cash, but this is foreign currency convertible bond. This was a bond or a loan. I will convert it into my equity. That means instead of paying you cash after 5 years or after 2 years, I'll be more comfortable in issuing my equity shares to you, right? I'll be more comfortable in issuing my equity shares to you. So can I say that whatever your bond or loan is, I have converted it into the equity shares. So this is called as a hybrid instrument. When you are giving loan, definitely it is a loan. I have to pay fixed interest, but I won't repay this loan in cash. I will repay this loan in the form of my equity shares, right? So ultimately you will be an equity shareholder in my company after 2 years, after the expiry of the tenure, right? Whereas the external commercial borrowing, I have to repay you in the form of cash or bank, but foreign currency convertible bond, this is a convertible bond. I'll pay you in my equity shares instead of paying you in cash, right? Next one, India Post and NSE. So Department of Post, they do have a very good network everywhere, even in the rural areas, they do have a very good network. Department of Post and NSE, National Stock Exchange. National Stock Exchange, which is a stock exchange basically in India, they have entered into a MOU, Memorandum of Understanding. The objective is expanding the mutual fund access across India. So basically NSE wants to penetrate the mutual fund market even in the small towns, in the rural areas, and Department of Post is having a very good network. India Post is having a very good network everywhere. So that's why I will say NSE is going to use the channel of circulating, of selling the mutual funds even in the small town areas as well. So the depreciation of INR does not affect here. Definitely it is going to affect here. Okay, that's a good question. Definitely it is going to affect here. It doesn't matter whether you are paying in your equity shares, whether you are paying in cash. If you are paying in cash, definitely you have to buy dollars. Even if you are paying in equity shares, you have to give more and more equity shares. Why? Because the INR depreciates. So it depends on the contract as well. Maybe we both have done the transaction. You are a foreign investor. You have given me a loan of $1 lakh, and at the same time we contracted that I'll be giving you 10,000 equity shares in my company. Now in this case, the equity shares are capped, are fixed. So it depends on the contract also. Okay, but usually I will say the foreign investors are quite smart and they will always try to cover the INR depreciation also, because it gives them a profitability, immediate profitability. They also know the concept of INR depreciation. So that's why you have to pay more and more equity shares at that time to compensate for the INR depreciation only, but it depends on the contract between both the parties. Okay. So here India Post has entered into a partnership with NSE, National Stock Exchange, for expanding their mutual fund business. Right, so it will be in two phases, but I don't think you have to go into too much detail of this particular news. Just the understanding of the headline will also be fine. Next is an article from the Economic Times newspaper. Surplus liquidity fuels the record parking in SDF. What is an SDF? Standing deposit facility. Standing deposit facility. If you are having excess money, if you are a financial institution, you have excess money, you can deposit that money, you can park that money in Reserve Bank of India. You will be getting 5%, right? We have studied this rate 5% in the monetary policy meeting decision also, which is also called as the floor rate, if you guys remember, the least rate. So SDF, repo rate, and then we do have the MSF. So here, because some banks are having quite high surplus money, and that's why they are parking more and more money in the SDF. So this is a record high that the banks have actually recorded 4.52 lakh crore with the Reserve Bank of India, and this is for the first time that this number is so high, right? Maybe they do have enough surplus fund now, and recently RBI has also injected a good amount of liquidity. Now they have started parking the money in the SDF, okay, which is called as standing deposit facility, and they'll be earning 5% interest rate on this money. So this tool was introduced by Reserve Bank of India in April 2022. If you have the excess money, you can definitely park it, and we have already covered the concept of the LAF corridor, right? So just like this, we do have the TREPS concept also, which is called as tri-party repo. What is tri-party repo? Let's suppose I am a mutual fund asset management company. I do have surplus fund, or maybe I am a financial institution. I do have surplus fund. So what I'll do? I'll invest in TREPS. I'll keep my money in TREPS. What is TREPS? Tri-party repo arrangement. It's nothing but I'm just giving you loan for short-term purpose. You will pay me interest. You will pay me interest. It works as repo rate only, right? So here the mutual funds, financial institutions are sending the money to other investors via the TREPS arrangement, via the tri-party repo arrangement, and you will be getting the interest. Now, the people who have actually taken loan must be giving collateral as well, must be giving securities as well. Now, who will take care of the security? Clearing Corporation of India, a third entity, will take care of the security. Not the borrower, not the lender, but Clearing Corporation of India will be taking care about the security, and that's why we call it as tri-party repo. We don't call it as repo, because when you are taking a loan with RBI, when you are taking a loan from RBI, you are giving securities to RBI. We call it as a repo. Why we call it as tri-party repo? Because some third party is taking care of the security, and that's why the name says it all, tri-party repo. That means there are three parties in it, right? Yes, we can say that the deposits are increasing at a much faster pace now as compared to loan, but that's a temporary thing, right? As of now, in the recent times, you were having shortage of liquidity. That's why RBI injected a lot of liquidity via open market operations, via INR and USD buy sell swap, right? But we can say that yes, on a temporary basis, maybe we were having a good amount of growth in the deposits, but not in the credit side. And that's why banks were not able to give more and more loans and advances, and that's why they are temporarily parking their money in the SDF. So this usually happens. Sometimes we do have deficit of liquidity, sometimes we do have surplus of liquidity, and we do have these tools like repo, like MSF, like SDF to manage the excess liquidity or the shortage of liquidity, right? Next one is a draft circular. That's why I'll just cover the crux of it. small NBFCs are going to be exempted from the registration under the RBI rules. So earlier we are having as of now strict regulations for NBFCs also, but if you are falling in the criteria of small NBFC, and the draft circular says that the definition of small NBFC means if your NBFC is having a asset size not exceeding 1000 crore rupee, you may be exempted from the registration requirements and your regulation requirements will be eased. Why? Just to provide you a breathing space. You are a small NBFCs, do your business, so you won't be having that much strict regulations, and it is a part of draft regulations as of now. So whenever this regulation is going to be finalized, I'll definitely come up with a video in my circular series, okay? In my circular series. Next one, RBI lifts 2.5 lakh crore investment limit for the FPI, foreign portfolio investors, via voluntary retention route. Please try to understand. RBI here wants to promote the investment in the debt market. RBI here wants to promote the investment in the debt market. So FPIs are also investing their money in the debt market of India. So earlier, if the FPI is investing via voluntary retention route, there are so many routes, like there is a general route having certain limits. There is a voluntary retention route. What is the voluntary retention route? If an FPI is investing money in the debt market via VRR, voluntary retention route, then as the name says it all, you need to voluntarily retain your money for a certain period of time. For a certain period of time, you need to retain your money. It's not like that you are pumping crores of money in the Indian market, and whenever you are getting a quick gain, you are taking your money out of the market. No, you have to voluntarily accept the retention fact also, right? So what is the retention fact here? It used to be 3 years and still it is 3 years, okay? So for 3 years, you have to retain your money. It's written here, minimum 3 years. So under VRR, voluntary retention route, you need to voluntarily commit that you will be keeping a minimum portion of your investment in India only for at least 3 years. For at least 3 years. If you are coming via general route, no worries at all, no problem at all, take your money, enjoy. But if you are coming via VRR route, voluntary retention route, you have voluntarily committed that you will at least keep your money in India in the debt market for a minimum 3-year period. For a minimum 3-year period. Okay, definitely, sure. So foreign portfolio investor, let's suppose Monisha is living in United States of America, right? She wants to invest the money in the Indian stock market or maybe debt market. So Monisha wants to invest the money in Indian stock market or maybe debt market or in India basically. So what you can do? You can invest your money definitely. You will be called as foreign portfolio investment. Why? Because you don't want controlling interest. You don't want to participate in the control of the company. Rather, you would love to speculate. You would love to invest your money and take out the profitability, take out the profits, right? So one thing is foreign direct investment, where we take controlling interest, where we have to acquire certain percentage to gain control in the company, right? That is called as a FDI, foreign direct investment. But FPI is more about investing in stocks, bonds, debentures, right? Is it restricted to citizens of India living abroad or anyone, sir? So definitely there are so many conditions in it, but as of now we'll be discussing about the FPI part, because if I start going into too much detail of this particular circular, it will take one next hour also to explain each and every criteria. Okay, so definitely so many rules and regulations are there. For NRIs different rules are there, for the NRs different rules are there, right? Non-residents के लिए different rules है, NRIs के लिए different rules है. As of now, if you are doing an FPI investment, if you are doing a foreign portfolio investment from outside India, you can definitely opt for the general route. But if you have opted for voluntary retention route, then you need to retain that money in India for at least 3 years. For at least 3 years. So earlier, RBI used to have a capping of 1.2 lakh crore in the VRR route. That means maximum up to 2.5 lakh crore only the foreign portfolio investors can invest in India, right? The FPIs can invest in India. But RBI has removed such a kind of capping, and it will be falling in the general rule as well, right? So whatever general rule capping is there, you have to follow the general rule capping only. You don't have to worry about the 2.5 lakh crore wali limit. Sir, what is the general rule capping? The general rule capping, just give me a second. Okay, here it is. If you are investing in central government securities, then 6% of the stock of the outstanding stock. If you are investing your money in corporate bonds, then 15%, up to 15% you can enter, right? And if it is in the state developmental loans, then 2% cap is there. Then in that case 2% cap is there. So this is the general, I will say, capping, and now only general capping will apply. That means you don't have to worry about this individual capping which we used to have 2.5 lakh crore. Okay. So now this is removed, but still you need to keep the money at least for 3 years. Still you have to keep the money for at least 3 years, but this limit of 2.5 lakh crore is again eliminated, because we have already, I will say, we have covered 80% of the limit of this 2.5 lakh crore as per the data, and RBI said to let's just get away with this particular limit and we will follow the general limit only. But if you are coming via VRR route, then for 3 years you need to lock in your money. You need to lock in your money for at least 3 years. Okay. So guys, that's all from my end. At the end of my PDF, definitely you will be finding some extra dose as well. Do cover it quickly whenever you get some time. Just give it a quick reading. So that's for your homework purpose. Okay. So thank you so much guys. Bye bye. Take care. See you soon in some other class.